To AIB's first online mortgage seminar. If you're tuned in today, you're obviously thinking of buying a home or maybe renovating your existing property, and either way you'll probably need to take out a mortgage. While this may seem like a daunting task, hopefully the next 10 to 15 minutes should shed some light on it and maybe help you get started. Both I and my colleagues across our countrywide network are committed to helping you through each step of the process. And when you do choose a home, we hope you'll choose AIB as your mortgage provider. We offer a solution for every possible property transaction, whether you're a first-time buyer or maybe you have an existing property and you're looking to sell it and move, either trading up or trading down, depending on your personal circumstances. You could be an existing customer of ours and you wish to do some renovations. We can arrange for a top-up on your mortgage. If you're looking at maybe building your own house, AIB can finance the purchase of the site, and we'll also assist with the building cost. In some cases, you may actually be looking at buying a second home, and in those cases, whether it's for holiday purposes, additional accommodation for family, for kids maybe going to college, or even an investment purchase. We also recognise that some of you may be in negative equity and still need to either renovate your property or maybe move home. And again, we have a solution and we're committed to assisting you in those cases also. We can lend up to 92% of the purchase price or the value of the property, up to a maximum of 400,000. Once the mortgage goes past 400,000, the maximum we can finance is 85% of the purchase price. And the only exception to that is if you were buying a one-bedroom apartment, and in that case, we would finance 75% of the purchase price. You can also opt to pay your mortgage back over a maximum period of 35 years, and that's subject to clearance by your 66th birthday or retirement age, whichever is the earlier. Also, where somebody's taking out a new mortgage with AIB, we offer what we call a deferred start. And this is just simply where you can actually opt to make no payments for the first 3 months. So your first payment is becoming due 3 months after you draw down the mortgage. And this is purely to assist you maybe in a situation where either you've bought or you're moving house, there's additional costs involved, so it's to give you that bit of breathing space before your first payment becomes due. We have over 200 mortgage advisors around our countrywide network, and I would recommend that you contact them as early as possible in the process. Once you decide you're actually thinking of buying a home, I'd call in and meet with one of our advisors. They'll take you through the application process step by step, and based on your individual circumstances, they'll also set out what supporting information you need to collect and submit to the bank to support that application. They'll also give you a sense of the timelines involved. So, from the time you make your application to when to expect to get your decision, and when you've got your full letter of offer, what the steps are thereafter. Alternatively, you can also go online, and AIB has a market-leading online proposition. We've just launched our new mortgage calculator, which, unlike normal calculators that give you an indicative figure based on your gross income, you can enter your net income into our calculator. You can put in all your personal financial details, all your outgoings, etc., and the calculator will give you an actual figure that the bank will be prepared to lend you, subject to receiving your supporting documents and validating them. You can also want to go a further step and submit a full application online, inputting all your own personal details and submitting it directly to the bank. On receipt of that application, we'll issue with correspondence setting out all the supporting information we need based on your specific details. And you can then actually submit those supporting documents directly online, uploading them onto your actual application. And when we've received all your supporting information, we can then go to a full and formal letter of offer online. Either way, whether you're going online or through our branch network, I would recommend that you actually get a sanction in principle as early as possible. What this means is that irrespective of whether you have a property or not, that you start the application process, you submit all your supporting documents, and the bank will come back to you with a full approval subject to property details. What this allows you to do is go out into the marketplace. You have a good idea of what your cost base is going to be, so you can look at properties in that range. It also means that when you do see a property, that you can actively bid on it and compete against other people who may have full approval or maybe cash purchasers. And once you have that property chosen, You can submit the details of the property along with your solicitor's details and evaluation, and AIB will be able to issue with a full formal letter of offer within 24 to 48 hours of that. The only thing I'd suggest at this stage is that you need to look at arranging mortgage protection, which is purely life cover on the life of yourself, and if there's a second borrower, the second borrower. You also need to look at taking out general insurance on the property once you've bought it. And it's a good idea to get these started early enough in the process as well. So by all means, again, talk to your mortgage advisor and then put you in touch with the proper specialist, or else go online, whichever. The supporting documents that we require don't differ whether you go online or through our branch network. And effectively what they would be is we would need the AIB salary certificate, which is available at any branch, or you can go online and download it. And that needs to be filled out by your employer, where they confirm your terms of employment and your income details. We also need to get your most recent P60, which would be your last year's P60, and your most recent 3 months pay slips. And again, this is just to look at the consistency of your income, because this is what we're going to use to assess the mortgage application. We also need to get bank statements and for non-AIB customers, and we're quite happy to take applications from non-AIB customers. But what we'll need is we'll need 6 months bank statements of your current account, savings, investments, and any other maybe outgoings or loans or commitments you have. If you're self-employed, because obviously your income differs, we need to get 3-year sets of accounts, and that again is just to look at the consistency of income rather than to assess it on 1 year's accounts. We also need to have that supported by a letter from your accountant confirming your tax affairs are up to date, and also your tax balancing statement from the revenue. If you're on contract employment, and a lot of people are, we are also quite happy to entertain an application. And all we need there is we need to get a CV-style history of your employment, because again, we just want to ensure that there's consistency of employment, and obviously that underpins consistency of income. We would expect anybody applying for a mortgage would be at least 12 months with their existing employer, or be on their second contract, one or the other. Again, the big question people are asking is, how much can I borrow? And again, the bank assess all mortgage applications on the basis of affordability, how much somebody can afford to pay back. And what we use is our net disposable income calculator. And all this is the actual online calculator I described a bit earlier. So what we do is we take your 3 pay slips, so we take maybe the average of that, and we then look at all your outgoings. So any financial commitments that you have in the medium to short term that are not going to vary, any other commitments you've made again that you're committed to in the short term, all need to be taken care of. The bank also then looks for you to allocate a certain amount of money for cost of living expenses. You need to be able to live at the same time, and we would normally take a figure of about €1,300 for a single person, 2,050 for a couple, and €250 for every dependent that a couple might have. So that also needs to be set aside for living expenses. What's left is known as your net disposable income, and that's available to you to make your mortgage repayments. But again, we need to stress those payments to ensure that if the interest rate goes up in the first 12 or 18 months, that you have enough disposable income not alone to pay your actual payments, but to pay a payment that might increase, or the interest rate might increase over that period of time. So just to look at an example of what it might look like for a couple, and we're going to take a couple with one dependent, and let's assume a purchase price of $275,000. The bank would give you 92% being our maximum loan. That would work out at $253,000. That means that you would have to have minimum savings or a deposit of $22,000. And the bank will need to see evidence of this $22,000, because we are required to ensure that the deposit or the equity going into a property is not borrowed. We would also suggest that you need to borrow more than the 8%, because you need to take care of legal fees, stamp duty, etc. So you probably need to aim towards around 10% of the purchase price as regards your savings. If we look at our example now and take what the current repayments would be on $253,000 over a 30-year mortgage at our current variable rate of 4.49, your payments would work out at €1,278. If we stress that, as we discussed about the stressing, we need to stress that at 2% above our variable rate. So the repayments at 6.49 would be €1,592. If we assume this couple have an annual income of 65,000, that would give them a net monthly income approximately of 4,400. Let's assume outgoings, monthly outgoings of 500. That could be loans, any other commitments, or it could be creche fees, etc., like that, of 500. And we've also discussed that we need to allocate cost of living. And for a joint couple with one child, that would be 2,300, as we already discussed. This leaves €1,600 approximately available. That's your net disposable income available for mortgage repayments. And in this example, obviously, that would cover the actual repayments of 1,278 very easily, and it would also be enough to cover the stress payments of 1,592. So in this particular example, AIB would be quite happy to lend this money to that couple, subject to receipt, as I said, of supporting documents and validating them. So in summary, you need to start saving as soon as possible. It's very important that even if you haven't got a property in mind, you actually start saving a small amount, and maybe as you get towards the property or you get towards the buying process, you need to increase those savings to build up your deposit, and obviously have enough left over then to make the other fees. I'd recommend you engage with the bank as early as possible in the process. So either contact your mortgage advisor or go online. That'll work out how much you can afford, so you get an idea of exactly how much you can afford. Once you know that, I'd recommend that you actually go and get a sanction in principle, irrespective of whether you have a property in mind or not. Once you actually get the details of the property, or you choose your property, you need to submit the details of that property along with your solicitor's details and your valuation, and the bank will issue with a formal letter of offer. Once you have that formal letter of offer, you're in a position now to finalise your contracts. The only other thing outstanding then would be you need to make sure that you've got your mortgage protection and your insurance in place, which I suggested you do as early as possible. Once that's in place, you're in a position now to draw down your mortgage and buy your home. That's it, folks. I'd like to ask Eddie Humphreys, a colleague of mine, to join me now. We have a few questions you've already submitted, which we'll go through, and feel free to submit any further questions as we go through them. Thank you.
Thanks, Jerry. We've a number of questions in, so we'll just get into them here. So the first question is, how long does it take to process the mortgage application? I'll cover this, Jerry. So depending on which channel you choose, if you drop into your branch and log into the online mortgage process, or if you contact our Direct Mortgages contact centre, the application process takes about 25 to 30 minutes. At the end of that process, you have a very good idea of exactly how much you can afford to borrow and what documentation is required. If you have documentation with you, like your P60 or payslips, as Jerry mentioned earlier on, we'll take that documentation, we'll package the full mortgage application and send it through to our lending department to make a full decision. And depending then again on which channel you've chosen, you can drop back into your branch, or you can upload your documentation online to proceed with the full application. Another question, maybe Jerry, you could answer this one. Is the process different if you wanted to buy an unfinished property?
The application process isn't probably that different, in the sense that you still go in, you get your approval for the amount of money you want. What is different, though, is that if it's a partially complete property, the bank would be lending you 92% of the purchase price of the property itself. And then once you've got an idea of how much you're going to spend on completing the property, we'd also advance you 92% of that cost as well. So it's quite similar to what we talked about, somebody building their own home. But there are two stages probably to the drawdown, but the application process would be very similar, so there wouldn't be a lot in it. In those cases that are maybe a little bit more complex than your standard case, that's where your mortgage advisor in the branch really comes into their own. So I'd suggest, again, get in and talk to them. They'll have experience in these things and be able to talk you through them. Okay, great. Another question here, it's around the e-mortgage process. What happens after I complete the e-mortgage calculator? So once you log on, you'll get a result at the end of keying in some personal details, and that will give you an approval in principal amount. You have the opportunity then to click apply online, and that will bring you through a registration process. It will create a unique e-mortgage portal, and that will allow you then to complete a full application, upload your documentation,
receive your sanction in principle online, and then see the full journey up to your letter of offer through the eMortgage portal. So you can, any queries that you may have, you can send it through the message center within the portal, and then any supporting documentation that we will look for, you can upload that documentation and we'll process the full application online end to end. Okay, so that's all the questions we have so far.
Okay, thanks, Eddie. And thank you for joining us today. What I would say to you is that if there's anything that hasn't been covered or any questions that you want to ask later and that you just didn't get a chance to, I'd recommend, again, use our branch network, call into our mortgage advisors. They're very experienced and they'll be only delighted to see you. So again, thanks again for joining us, and the very best of luck with your house hunting. Thank you.
Thank you.
We okay?